It's time for Financial Freedom Friday with Matt Theriault.
Thank you, Robert, for taking time out to meet with us. And
thank you.
It's a pleasure to meet you. I feel like you've probably heard this a million times. I feel like I know you already.
Oh, thank you.
I read the original book, and I think I've read every single one since.
Thank you.
And, a lot of the stuff that you've probably heard a lot of times, it just wouldn't feel right if we just started this conversation without me at least thanking you. And, you really changed my life. And not just in an idea way. I've actually been able to take just about everything I think I've heard from you and implement it into my life and stopped focusing on creating the piles of money, and we're focused on creating streams of money. And we've been able to do that for our clients as well. And of all the people that I've interviewed, they all, at some point in our conversation, cite Rich Dad, Poor Dad as a turning point in their life. So just wanted to start by acknowledging you for the contribution that you've made to the world.
I appreciate that.
You bet.
Because as you know, I'm at times controversial. So,
well, that kind of leads perfectly into this next question. Is that, I hear a lot of your critics talk about its theory. It doesn't work, and we've actually been able to implement it and prove that it works. And we've held the hands of our clients and had it work for them. And I'm really curious to what your opinion is of why the financial experts of today, some of them with the biggest platforms, many of them household names, why are they? Where's the resistance? Why are they still subscribing to the work, save type mentality?
this is a middle class mentality. Mm-hmm. It's very, very middle class, and nothing wrong with being middle class, because I came from, should I say, middle class. Mm-hmm. I mean, it's go to college,
right,
get a job, work hard, right, save money, buy a house because your house is an asset, get out of debt, live below your means, mm-hmm, and invest for the long term in the stock market.
Right.
That's extremely middle class. Play it safe, and vote Republican or Democrat, and your vote counts. And meanwhile, we've been ripped off.
Mm-hmm.
So as a little boy, I write about my latest book, Second Chance,
Sure,
which you get a copy of, is that all coins have three sides. There's no such thing as a one-sided coin. Mm-hmm. So when somebody takes a side, then you're ignorant because you don't see the other side. Mm-hmm. So what I say in Second Chance here is that a coin, all coins, there's no such thing as an exception to that coin. So there's heads, tails, and the edge. Mm-hmm. And intelligence occurs when you stand on the edge. Mm-hmm. So as a 9-year-old boy having a rich dad and a poor dad, I had to stand on the edge. So my poor dad, PhD, good man, honest man, hardworking, volunteered in civic duties and all that stuff. Everything a man should be. Good father, never fooled around with my mother, was home every night, didn't drink that much, all that stuff. Mm-hmm. Go to school, get a job, save money, work hard, your house is an asset, and da-da-da. So that was one side of the coin, the middle class side, also the poor side of the coin. Mm-hmm. On the other side of the coin, the tail side, let's say, was my rich dad. He says, you're not going to get rich doing that. Mm-hmm. That's what the rich don't do that.
Right.
So as a 9 or 10-year-old boy, I'm standing on the edge of the coin, which is a story of rich dad, poor dad, looking over at the poor and middle class on one side and the rich on the other. And since most people go to school and get a job and all this, right, that's all they know. Mm-hmm. And so when I say something else, like your house is not an asset, savers are losers, the rich don't work for money,
right,
things like that. I don't invest in the stock market. The other side of the coin goes nuts. And so what you were able to do was read my book and stand on the edge of the coin and go, is it poor dad or is it rich dad? Mm-hmm. And so the people who took the side of rich dad, they're happy, they're moving forward and all this stuff. The guys who took poor dad think I'm the Antichrist. They think I'm Bin Laden or something.
Right, right.
I mean, I'm a terrorist out there.
Mm-hmm.
And I'm not saying don't go to school. I'm just saying school does not teach you this.
Right.
Because that was my poor dad.
Right.
So that's kind of the reason. And so for your people that listen to you, they stand on the edge and they have to make that decision too. Am I going middle class and poor, or am I going to go rich? I went rich.
Right. Do you see any, you've been the book that came out 15 years ago, Rich Dad Poor Dad?
1997. So
Oh,
it's
is that, or
almost-
I thought about
almost
2000,
20 years.
2001. Okay,
20
so it was
years.
a long time ago.
Yeah.
It's been a long time. What type of progress have you seen in your message infiltrating the mainstream? Or has it? Are you discouraged? Are you encouraged by what's going on right now?
No, it's like I said. All coins have three sides.
Right.
You know, there's no such thing as a one-sided coin.
Right,
There's not one size fits all.
right. I see what you're saying.
So the people who are on the go to school, get a job, work hard, save money, invest for the long term, live below your means, they're still doing what they do. You know, and the guys like you said, oh, okay, I'm going this side.
Right.
So then there's what I consider a migration. You know, certain people are going this way, this way, this way. Especially, look, in 1997, I said your house is not an asset, and I was crucified.
Right.
You know, I was not a Jewish guy, I'm a Japanese guy hanging on the cross, you know. You don't know what you're talking about. Then in 2007, you know, the subprime mortgage crashed. And so everything I said came true. I said, your house is not an asset, and millions, and all across the world, millions of people found out their house is a liability.
Right.
But, you know, they still think a house is an asset, even though it's a liability. And the other thing happened was in 2008, you know, quantitative easing started, TARP programs and all this, and they found out that savers are losers. So I had written a book a little bit earlier. We can show it on the Cryon. It was called Rich Dad's Prophecy. So Rich Dad's Prophecy came out in 2002. So I'm still the bad guy up in 2002. And I said the biggest stock market crash in history is coming in 2016. So I am 12 years out making that forecast. And if you look at the charts, 2016 is coming.
It sure is.
And it may not be 2016, and I hope it doesn't happen. But if that Rich Dad's prophecy comes true, the upper middle class will get wiped out because most Americans, most people throughout the world today are in the stock market. In other words, if you work for the government of, let's say, Arizona, California, Arizona, your retirement's in the stock market. If you're a school teacher, your retirement is in the stock market. So never has the stock market, you know, the Dow, let's say, been so high. The Dow is over 17,000. And they're saying, oh, come on in, man, the stock market's high. You got to be crazy.
Right.
Why would you buy at an all-time high? Because the only direction you can go next is down.
Yes.
So that's why in 2002, 2004, Rich Dad's Prophecy, and hopefully it doesn't come true, but if it does, we're going to see a depression like we've never seen before.
This is too deep of a question. You can redirect it if you want. But if these prophecies do come true in 2016, your prediction of the biggest stock market crash, what are some of the things that someone could do right now to prepare themselves for that, so to mitigate their damage and mitigate their loss?
Well, as being as capitalistic as possible, buy this book here.
Okay.
That's why I wrote this book, because it just came out in January of 2015. And the book's in three parts: past, present, future. So the reason most people cannot see the future is because they've never had anything, they don't understand the past. So part one of this book is written very, very simply. I use a lot of pictures, you know, pictures like this. So everybody can understand, a 10-year-old kid can understand, because I could understand it. And you'll see what's happening in the past, and when you can see the past, you can see the future. And so part three of this book is the future, stuff like this. And you'll understand standing on the edge of the coin. When you read this book, you will stand on the edge of the coin, and you go, okay, this is what the middle class is doing, so the poor is doing on this side, and this is what the rich are doing. The rich are not in the stock market. They're going to get out. So all the guys who invest for the long term, for their 401k, hopefully I'm wrong, will be wiped out. So all the doctors, the lawyers, the CEOs and all that, anybody whose retirement is based on the stock market is in trouble. In danger. If I'm correct, if my Rich Dad's correct.
Right.
So Rich Dad's second chance here is saying this: read the past, stand in the present, and look at the future.
Got it.
And you make your mind up, because your second chance, this may be it. This may be the biggest opportunity of all, simply because, as you and I know, more money is made when the markets crash. You know what I mean? I made more money after 2007 buying the best real estate at cheap prices at low interest rates.
Right.
That's how you get rich. And all the fools jump in when prices are high. So idiots jump in at the top, and the rich guys jump in at the bottom. And that's what this book's about.
Got
It's
it.
your second chance to make, I hate to say make a killing, but not get killed.
I can't wait to read it. I haven't, just as the first time seeing it. I knew about it though.
I made it very simple so a kid can understand it, but also you can talk to your friends. You see if it's in pictures. You have friends who are saying, yeah, I'm going to invest for the long term in my 401k. If you just look at part one, they go, oh my God, maybe I should rethink something.
Right. You know, based off your past books, there's no doubt in my mind it's going to be outstanding, and I can't wait to read it.
Well, it depends on who you talk to.
Oh, well.
You know, your financial planners will hate this book. They'll hate it.
I love it.
They've always hated my books anyway.
I love it. I love it. So my big question is something I've always wanted to ask you. If I ever had the opportunity to sit down with you, one thing I always wanted to ask was, you know, with so much of the world now getting their education from Robert Kiyosaki, where does Robert Kiyosaki get his financial education from?
Stay tuned. We'll be right back with more Robert Kiyosaki in 30 seconds.
Your portfolio has seen better days. But this too shall pass. And the best for you is yet to come. Together, we'll get you there faster. We're cash flow savvy. And we'd like to share some information with you that will show you how you can take control of your financial future and accelerate its arrival. Go to cashflowsavvy.com. More building, less waiting. cashflowsavvy.com.
Where does Robert Kiyosaki get his financial education from?
Well, again, it's covered in Second Chance.
It is. Okay.
Yeah, there was two.
Convenient.
There were two men who really influenced my life. One was my rich dad, obviously. My poor dad also, because he was a good man, a humanitarian, he was a socialist, and my rich dad was a capitalist. So rich dad really affected me. But there was another man who was more of a socialist. His name was Dr. R. Buckminster Fuller, and he's considered the planet's friendly genius because he wanted a planet that worked for everybody. But he was also known as a futurist. So Second Chance is about Dr. Buckminster Fuller, and the story starts in 1967 when I was 20 years old, and I was schooled in New York, and I hitchhiked from New York to Montreal, the Expo 67, to see the World's Fair on the future. Bucky Fuller's dome was the U.S. pavilion on the future. So I'm a 20-year-old kid, I walk into this dome, it's massive, you know, I'm going, wow. And all of a sudden, I go, wow, this guy he's in another dimension. He's another realm of thought, you know. And I went, wow. So I started to understand, as Fuller did, you can actually see the future. He is considered a futurist because he actually found a way to see the future. So Second Chance was designed to allow the reader to see their future, not my future, your future, their future. And you can see the future, then you can make changes. So really, it was Bucky Fuller and my rich dad. And Bucky Fuller and rich dad were as opposite as you can get. You know, one was a capitalist, Fuller was a socialist. But then in 1983, a year after his death, I studied with Fuller 3 different times, 81, 82, and 83. And then 2 weeks after my last time with him, he passed away, July 1st, 1983. And I was just lost. It's like losing a father. You know?
Sure.
And then a few months later, his book came out posthumously. It was called The Grunch of Giants. So we can show that on screen.
Sure.
It's a hard book to read. Buck is hard to read. But Grunch of Giants was saying the same thing my rich dad was saying. And that's when they came together.
Got it.
And when I understood those two, I could see my future, if you know what I mean. I go, wow. And that meant I could not do what I was doing anymore. I was in rock and roll, working the Police, Duran Duran, Iron Maiden, Boy George, Van Halen. You know, I was having a lot of fun, sex, drugs, rock and roll.
Right.
But suddenly, when I could see what my rich dad was saying to come true, and what Bucky Fuller was saying to come true, in '84 I sold everything, and that's when I met my wife Kim. And I said, in good conscience, I can no longer be in rock and roll, just making money to make money. And I said, I got to start teaching. So we can all do something.
Right.
And I just, you know, even if it's a little thing, we can all do something.
Right.
And so what Kim and I did, my friend Blair Singer, the Rich Dad Advisor, we just started to teach. And nobody listened to us. They still don't listen to us. But we can all do something. So really that's kind of the story of Bucky Fuller, his book, Grunch of Giants, Rich Dad, Poor Dad, and now Second Chance. It's a combination of the 3 books.
Super. Well, it's in stores now. You can go to Amazon and pick up a copy.
Can I add something for those of you who are actually interested?
Sure.
When I invest, people think I'm a real estate investor. When you read Second Chance, you'll understand I do not invest for real estate. I invest using debt and taxes. You see, on one side of the coin is a poor middle class. In the poor middle class, debt and taxes makes them poor. And the reason the rich are getting richer today is because on the other side of the coin, debt and taxes makes the rich richer. And so it's so opposite. And the reason people cannot see, the poor middle class cannot see what the rich are doing is because they have no education. And I commend you for giving them the education. But when you read Second Chance, you'll understand when the market started coming down in 2007, I didn't get out of debt. My partner, Ken McElroy, is my real estate guy, partner in all this. We borrowed nearly $500 million. So when everybody's trying to get out of debt, we're getting into debt. It's opposite, the opposite side of the coin.
Sure.
So we bought with debt, the banker's money. It's actually your money because you're savers. So
Right.
we bought $500 million worth of real estate at approximately 5%. In 2014, because the economy is so bad, and that's tax-free money too. Debt is tax-free money. It's lovely stuff. And so when 2014, they reduced our interest rates from 5% to 3%. So do the math. What's 2% of $500 million?
$500 million. It's quite a bit.
That's money in my pocket.
Right.
Tax-free money. So more than anything else, Second Chance is for your people because they're actually already proactive, thinking the way you think.
Right.
So it's not really real estate, it's debt and taxes. It's the same as oil and gas. Why am I in oil and gas? The price of oil is coming down. It has nothing to do with the price of oil. It has to do with taxes. When I invest $1 million in oil, or you can invest 10,000, let's say, you get 80% of your money back in taxes. So the reason the rich are getting richer and the poor and middle class are getting poor is 2 words, debt, taxes. And Second Chance will have you understand that. I'm not saying it's easy. I'm not saying everybody can do it. But you will understand that. And that's why the guys in stocks and bonds and mutual funds and all that do not like what I say, because debt and taxes works against them.
Right.
I hate to say this, every time when we started printing money, quantitative easing, we basically took the poor middle class and threw them under the bus. We said, screw you. We have to protect the rich. And I hate to say this, nothing has changed. So in closing, if it's closing, I'll have to say, your job is to stand on the edge. Poor middle class on one side, rich on the other side, and be the intelligent thing is stand on the edge of the coin, read Second Chance and see which side is best for you, and do what's best for you. Because I don't expect people to do what I do,
Right.
but you got to do what you do.
Right. And everybody out there knows their situation much better than we do.
Yes.
Read the book and make up a decision. Make up your own decision.
Yes.
Right. Robert, I appreciate it so much.
Thank you. Thanks
This
for
is
coming all the
awesome.
way from L.A.
Oh, you bet. You bet. And thanks for taking time on a Saturday morning to
Thanks
to
for
meet with
teaching.
me.
Teaching is the most important thing.
Yeah, absolutely. Absolutely. It's rewarding, isn't it?
It's soul satisfying.
Absolutely.